Hello and welcome to another episode of Casual Friday, brought to you by FTX. Links available in the description below. If you want the chill mobile app to track your portfolio, do spot trading, swap from one asset, it's there. If you're going to be a degen and try to trade the 0.01% range at 100x leverage, we don't recommend it, but people kind of spill over into the more leveraged products. If you want to prove to them that we're somewhat useful partners, signing up via our link helps and gives you discounted fees. More importantly than that, though, there is a free leverage trading guide available in the description. It specifically talks about liquidations and how not to get carried out, how to use leverage responsibly, some different use cases. It's a good doc, either just to learn the stuff if you're new, or a refresher if it's been a while. In any case, thank you to them for supporting the show. We will be talking about FTX later on, given they've been in the... Sam especially has certainly been in the crypto Twitter zeitgeist recently on the regulatory front, which we'll cover. But we will start with Candlestick Make Boing, because that's an area where we actually have some jurisdiction. As always, subscribe, like, do all the YouTube stuff. We're building through the bear market, whatever that means, vibing in the Discord, and we'll be here, good conditions or bad. And it seems more of the same for the time being, Don. I'm looking at the price, not a good price. We could do the same old spiel. Oh, here's the monthly, it closed below. It didn't break down, but it's resistance, yada, yada. But I think the core summary is 20k is still acting as resistance more than is acting anything else. And then on the daily, that 19k range low support, we're on the 15th test or whatever, and it keeps, it's still there pretty much. The range is getting even narrower than it was. And the support is the same. I don't know what to make of this. I mean, to me, it just doesn't. It's barely even tradable. Especially, there's no swing trades available, right? Full stop. That idea is a joke. As far as even day trading this type of thing, unless you're doing like short-term correlation trades or like really small rotations, even the daily range is just so compressed at this point. I don't know. I don't like how this looks. It's at support, as we still like to say, but hard to be too optimistic on the 15th time. What have I butchered there?
Yeah, I mean, it's exactly what you said. You said the candlestick make boing at the start. Candlestick very much does not make boing right now.
The resistance candlesticks are making boing.
They're making boing, yeah, but that's not what we want to see, right? No, it's kind of been really shitty. I do totally agree that that's just no trade. Honestly, you can argue for bullish, you can argue for bearish, but finding a good trade in this range, especially for Bitcoin, just seems very hard to do. I think if you're a bear on the S&P, Bitcoin is a good thing to trade because Bitcoin's just been bearish in comparison to the S&P. So whenever the S&P moves up, Bitcoin moves up less. And whenever the S&P moves down, Bitcoin moves down more. So basically, the only reason for me that I could see to trade Bitcoin is if you want to trade it in the bearish, like if you want to trade the S&P with a little bit more like confidence. Because
how sad is that as a sentence, by the way?
It's the fucking worst. It's really sad. You can even see it on the low time frames, right? You can see squeezes on the S&P on like the hourly, just to jump ahead of whatever. You can see that the S&P's moved up a little on the hourly. And then you look on Bitcoin and you see that that's done the same, but retraced almost the entire candle already. Mm-hmm. So it's kind of, it's a shit chart, really. And crypto as a whole has been like that. It's been weak. It's been uninteresting, and there's really not that much to do, which is a shitty way to start a show like this because then everyone's
we're here for an hour. Yeah, no, exactly. We will find some things to talk about, don't worry, and we've got some headlines and stuff as well. But I think, as far as the technicals go, when you're dealing with like $1,000 range, what do you realistically expect us to do, right? I think if anything, it's a virtue that we haven't been super flip-flopping, like every green candle being like, this is it, and every red candle being like, this is it, It's been pretty muted expectations given the price action. It might be interesting as an intellectual exercise. If we wanted to steel man the bullish and the bearish case, how would you go about that? I think if you wanted to steel man the bullish case, it'd be something along the lines of, look, everything's already wrecked and retraced so much that there's signs that we're approaching peak tightening, and the market has thrown the kitchen sink at 19k, and it's holding and seems to be holding value. None of these breakdowns are sticking, and it makes sense for it to be like some sort of floor, right? And the steel man for the bearish case is basically that the macro stuff isn't over. Bonds are still, like the credit markets is still a complete mess. Tightening isn't over yet. The S&P looks like technically dog shit. Bitcoin's been failing to track the S&P, and this is much more like 6K, where you have increasingly lower highs, smaller bounces at the same support until eventually it cracks. Be it from something in, endogenous to the crypto space, like the miners selling or some sort of capitulation there, or something breaks in TradFi world, which takes us down lower with it. I think those are kind of, have I missed any key points as far as steel manning I guess the extreme cases?
No, I don't think so. The thing is, like you said, we have a few risks. If you're bullish, you have a few risks, and it's not only crypto centric, right? Because if the S&P breaks down, we will break down too. So that's
I'm already having a breakdown. I don't know about you. Like, I'm already there.
It kind of sucks, right? Because at that point, it's not really, because the edge that we have largely as crypto traders is in crypto, right? So controlling these outside factors beyond just saying, okay, hey, this is bullish environment. Everything's been going up for years, so makes sense to be like bullish. And now having this kind of background in, okay, the S&P has been bearish, so it makes sense to be bearish. Like beyond that, there's not really that much edge, in my opinion, for most crypto traders, right? A lot of people have tried to trade around the macro. Most people I've seen try to do it have just hilariously failed. Besides like just candlestick make point, because for some reason that's been really, really, really good. But yeah, it's kind of like this situation where it's a little bit out of our control, and that makes it really, really tough for, I think, most people. I'm not gonna say it's super, super easy to trade this for me either, because I mean, I've not been doing too much. I've been trading around a little, made a few percent here and there, but nothing groundbreaking, right? Because there's nothing to get really. There's no opportunities. There's no real excitement in the market, so we're just kind of stuck with sideways.
Yeah.
And yeah,
squeezing water from a rock. That's what it feels like a lot of the time. Yeah, I think as far as BTC goes, I mean, people sure, still whatever, look forward to the technical update and pay attention to those. But there really isn't much to say beyond what we've said. 20k still appears to be, 20 to 21k still appears to be resistance, and 19k still appears to be support. And that's all she wrote. And if one of those breaks, that'll be a signal. If one of those breaks and fails to keep going, that'll be a signal. But at this point, ping-ponging in a narrow range like that, it's not going to generate much. And I think my still prevailing view is I want to get out of this range, because then it starts to look like 6k with every single week. And that's sort of been the direction it's been headed in terms of where price has been glued to. So I certainly want to see a shift in that behavior. And again, we write about this in more detail in Technical Roundup, trletter.com, every week. Sign up, free newsletter, etc. As I said as we said there, and as I said in my video, like if you get a break above 21k or thereabouts, that's like the first higher high and first like bullish impulse that we've seen in months or like in quite a long time, so that might be a signal worth taking seriously. Or if you get a real breakdown that then reclaims, not these wicks, but I mean like a real meaty type of breakdown that then trades back within the range, that's also quite a good setup, right? But in the absence of that, when the range is only getting narrower and it's staying within those boundaries, I mean, you can do the day trading thing of picking up pennies in front of that steamroller as the range gets narrower and narrower. But into anyone interested in position trading or swing trading or whatever type of language you want to use, basically bigger rotations, they're just not in the market right now. And that's kind of it. I almost think it's dishonest. The market doesn't change much, and people just either massively change their views or make extra long form content just to, like, I don't know, summon some sort of engagement or whatever else. My Twitter's been inactive, yours has been, been posting stuff here and there, but certainly not kind of pure market commentary, because there's nothing to do, nothing to see. And sometimes it's okay to look at a market and say, hey, look, I'm waiting for a signal, things have been the same for longer than I'd have liked, but you don't have control over that. So sometimes you just have to chill and wait. And that's kind of the theme here. And again, I think it is fair to kind of go back to almost first principles and get that prior cycles high on BTC, get that prior cycles high for ETH, and say, I want to be trading more above there than below there, and then I could sort of peer out a little bit,
Yeah. I would like to add the exact same requirements, but I want to see Bitcoin actually outperform the S&P a little bit. Yeah. This is, I mean, the current situation really is not constructive at all. We've seen multiple days where the S&P is up or just barely down, and Bitcoin's been kind of bleeding. And it's not something that you want to see. So I want to have that behind me. I want to have the Bitcoin be at, like, show some strength. And then I also want to see it above 21, 22 and ETH above 1.4K. We've talked about that for quite a while now.
Still hasn't happened.
It still hasn't happened, yeah.
Please. We're not asking for. I almost, the first time I said it, almost sounded like a meme because I'm like, well, realistically, how long is the market going to stay below there? And the answer's a long time, apparently.
It's like 5% away.
I know, it's
be
scary,
like
and that's
that
like the
hard.
monthly range or something, 5%.
Yes.
But yeah, I think that's a pretty reasonable way of looking at it. Like, you want to see the market be accepted back above key levels and not massively underperform huge risk indices in the TradFi world in doing so. Again, guys, I'm not asking for a lot. Please, please do it. Devs need to fix it. I think that kind of summarizes our ETH view to a large extent as well, right? 1400 prior cycles high. It's been raiding. It's not a World of Warcraft thing. It's been trading between 1200 and 1400. And it hasn't even really been spending a lot of time testing those levels. This has been very anemic, Like, at least on Bitcoin, you could have that 19K range low that's been tested a shitload and up to 20K, and it's been at least trading nearer, like, closer to the structures that matter. Here, it's spent far less time testing resistance, far less time testing support, at least when it comes to, like, proper, the high time frame levels that matter. It's been just congesting between those in the 1.3K area, and that's sort of all she wrote, right? And I think the same consideration applies. If you get a break at either of those boundaries, above 1.4 or below 1.2, that's signal. If it breaks and fails to follow through, that's signal. But like in the middle of two ranges and moving sideways there for 2 weeks, you don't really even have good high time frame levels to trade. I mean, depends how you draw. I know you've got the weekly as a bit more of a generous zone, but if you just take the 1.2, 1.4, which I think on the slightly lower time frames is the clearest, it's not even been, it hasn't had the courtesy to trade at those levels even during this consolidation. So it's kind of whatever, at least for me.
Yeah.
This is the kind of thing where I'm making a video for YouTube and I have to like talk about the levels and how I'm viewing them, why they matter. Whereas in my everyday life, I'd click on this chart, see that it's not at 1.4 or not at 1.2, and I just click off it in like half a second. That's sort of where that market is for me.
Yep. It's just the trades don't exist, which
they're not real.
It's not. Like people always think trading is all about being in a trade constantly. Trading is much more about being not in a trade and waiting for the trade to come to you, right? If you always chase the market or if you're always just looking for something, oftentimes you'll just take signal in noise, right? So you'll see noise and you'll be like, oh shit, there's a signal, I need to take a trade. And then you'll bleed out and bleed out. And every single dollar that you lose in the bear market is like $10 lost in the bull market, right? So oftentimes if you're just chilling, not losing money, you're making a shitload down the road just by having it. I've seen too many people lose like 90% of their portfolio trading chop, and then the bull market comes around and everything 10x's till the top, and they're back at their all-time high, even though prices are much, much higher. And then the next bear market comes around, right? So you kind of have to protect your capital. And trading chop, especially on leverage like this, is definitely not one way to do it, because I can guarantee you almost everyone loses money, because even if you have a huge edge, the fees alone, the leverage trading fees that you're going to have to pay to basically get in and out of your position is going to be larger than any kind of edge you have. Because when a market is just trading up 1 or 2%, down 1 or 2%, if you don't nail it perfectly, it's too expensive to take the trades. So I can almost guarantee you like 90-95% of people, if not more, that are trying to trade this chop on the lower time frames are losing a shitload of money. And like I said, this is going to be painful when it actually starts going up again, because then you're wondering, hey, why the fuck do I only have $100 to invest in this? I should have much, much more, right? And that's my tip, honestly. Like if you're trading this on leverage, just be a little bit more careful, because obviously if you have been, I think I can speak for everyone in the audience that is trading this, that it's not easy, and it's oh man, it's bleeding. Basically, you're gonna bleed money.
I just have distinct memories of certain points in the market where I'm trying to like low time frame trade something on leverage, mostly in like 2019-ish or 2018, 2019. I just remember I'm trying to trade something on leverage, usually Bitcoin, right? Like on BitMEX. Like I'm trying to trade it and I go in, out, in and out, can't get shit done. And I lose like, if I'm sizing about 1 or 2% per trade on those specific setups. And I've eaten, basically round tripped or eaten shit 5-6 times. And like I'm down 6 to 8% on my account, and I just zoom out and I'm like, holy fuck, I'm an idiot. Like literally nothing happened, right? Like the market just didn't move. There's been no shift in structure, nothing. And I've lost like these significant percentage points off my balance just trying to make something happen. And it's one of the most, like, you feel really stupid when you do it, but it's also very humbling and certainly gives you an appreciation for what a good trade actually looks like. But you don't want to be in that in those shoes, because I've been there, where, you know, you lose like a chunk of your account that doesn't feel good, and then you just zoom out and you're like, what the fuck was I doing? You know, there's like
Yes.
really nothing going on here. And then to preempt a potential question, which might be like, oh well, you know, if you're not always in a trade, or if you're not like chasing the market, etc., and you take this approach, like how do you make any money in the end? Well, the answer is you actually size up properly when you do have an edge, and therefore your overall expectancy in your trading career is much higher, right? Like you can go in and start taking these edgeless trades for like 0.25, 0.5, you know, whatever percent risk, in out, round trip, fees, break even, scratch, loss, small winner, you know, like that type of churn. Or you sit there and then when you see something, you smack it with like 5, maybe even 10% of your risk, right? Maybe even more, depending on what the setup looks like. And that pays your bills, and you can actually logically and kind of mathematically justify sizing up in those setups because they confer a bigger edge and they're much less frequent. It's plus EV, however you want to term it, right? As opposed to just grinding down your portfolio with small position sizes, trying to catch rotations, which are getting increasingly smaller, right? That's the thing. Even if you are trading this on leverage, like if you're sizing this as a big chunk of your account, that's probably not plus EV, right? That like if you're wrong, that's going to take you out bigly. And even if you're right, the upside isn't as, you know, anywhere near as attractive as it would be in other conditions. So it's kind of a lose-lose, realistically. I think if you want to just poke at the market and trade like lower time frame scalps and rotations, again, I can think of like 5 dudes who can do that well, and even they know it's sort of just almost like target practice more than anything. And then if you want to do that, that's fine. But I don't think these are types of conditions that confer like, okay, I'm going to properly size up. I see a really good setup here. Just the rotations aren't big enough, man. Yeah, that's kind of all she wrote, I think, for BTC and ETH. I do want to cover the S&P quickly, and then we can jump into a few of the altcoins.
Yes.
What do you think of this thing? Because in Technical Roundup, we made the argument that it moved from monthly support into monthly resistance. So from 3,500 to basically to 3,700. And that's kind of where the Pico top came in on the upswing. You can see the daily closes at those monthly levels were mega clean, right? And now it's currently testing the underside of that same monthly cluster on the daily. That's kind of where the high of the day has come in so far. And the 4 hour looks, I don't know, it's a bit downtrendy, but basically it's at resistance, right? Like even if you just use that as a range, 3.7-ish resistance, 3.5-ish support, it looks like it reacted quite well to the pinnacle, if you will, of resistance, that kind of the top side of it, and now it's testing the underside. Or in any case, regardless of how it closes, it seems to be an area of monthly resistance. What do you think of this? Is it going to go back to support? Do you any kind of signal here being generated for you based on the chart?
Yeah, I mean, I think it's probably going to close around resistance this month and then kind of go back to support next month. That's at least my gut feeling. It's low enough that it can do whatever, really. I could also see it just come back in the range. That'd be bullish. But until it does that, I think you just have to look at it from a bearish point of view, because it's been downtrending. That's one thing, right? The clearer, like bigger picture has been downtrendy. Obviously not if you zoom out all the way. So, I mean, you will want to buy this thing eventually, because if you zoom out, it's just an up-only market. But right now, in the last few months, it's obviously not been, right? So the trend's strongly down, and every time it tests resistance, it gets ejected. So it doesn't really make much sense to expect this resistance not to work. It's much, much better in my eyes anyway to expect it will work. And if it doesn't, then you have some form of meaningful change in behavior that you can actually try to take advantage of, right? So I want to see 3.7K. I think like the reaction to it, I think we're probably going to consolidate around there, close at it, and then we're probably going to get rejected just based on how it's been trading, right? And where do we go from there? I think the 3.3K to 3.5K support area is interesting. Could see a few bounces there. So I could see us kind of go sideways in between 3.7-ish and 3.3, somewhere in that range. And the interesting thing is S&P has been going sideways and crypto's been bleeding a little. So if that continues, I think that would honestly be almost max pain, because you see the indices just going sideways, recovering a little bit, and you as a crypto investor just get completely rinsed. That'd be pretty not nice. But yeah, that's kind of what it feels like right now. I think if we get rejected at 3.7K and go to 3.3 or thereabouts, it's going to be really bad for crypto, because Bitcoin is really leaning on this major support in the 19Ks. And someone big would have to gobble all of it up to not break below it, right? Because a few percent moves in the S&P has been leading to big moves on Bitcoin, and there's no room anymore. So we're kind of boxed in this situation where Bitcoin's at the last support and barely holding on. And if the S&P kind of uses resistance as it has done the entire last few months, then there's a good chance that Bitcoin actually breaks down as well. So yeah, for me, it's kind of a range between 3.3, 3.7, leaning bearish, still hoping for the price to actually close above resistance, but not betting on it and not expecting it either.
There's one of those clean technical bearish retest. A reclaim would be a welcome surprise, sort of thing.
Exactly.
Okay. Yeah, I can live with that. So, I mean, and I agree with you. It's one of those weird things where, if the S&P gets to that 3,300 handle or whatever, the bottom of that range, it actually structurally wouldn't look terrible, right? Like, it'd be at a good level, basically. Like, yes, it's a downtrend, yes, it's a breakdown, but in terms of structure, it would be at support. It's just the journey from 3.7 to low to mid 3,000s would wreck all of our charts, That's the thing. It's like, I think the argument sort of implicitly being made there is, can crypto survive at this range low if the S&P pulls back again? And the answer is maybe not, or probably not, because it's been heavy even when the S&P's been doing well, right? As you said, it's one of those not max pain necessarily, but one of those like not feel good scenarios where just an orderly pullback to support in the S&P can sort of crush our markets, which isn't great. So we'll have to keep an eye out for that. Yeah. I'm not going to spend too long on the NASDAQ. You can see on the monthly chart, it's kind of just the same story, pretty much. That underside retest we talked about at 11.1. It's sort of, just like the S&P is kind of backtesting resistance, so is the NASDAQ. So monthly close is in 10 days or so. Obviously slightly earlier in the no weekend trading, and the close isn't on the Sunday as far as the indices go. So we'll get to take a look at that, but obviously kind of this is the thing, the time component in all of this is very uncomfortable, right? Like the amount of time we've spent at 19K on BTC, the amount of time there is to rescue these high time frame retests on indices, it's like we kind of have to get a move on if this is going to look good. So something to bear in mind. But I think I at least feel that I've been protected quite well by having rather straightforward invalidations. Like, give me a higher high through 20K, then we can have a conversation, right? Or trade above 1,400, then we can have a conversation. And the market's been shit, but it also hasn't been too fake-outy. So you kind of have to give credit where credit is due, right? Like, the entire time where stuff has looked rough, there haven't been no crazy fake-outs in the last couple of months on BTC and ETH, no crazy fake-outs in the indices. It's all been fairly technical and adhering to quite reasonable pivots or invalidations. Do you think that's fair?
Yeah, I think anyone that's trading this reasonable should not be losing money, which is a little bit rough to say, because I get it when you're trading, and like when your job's trading, or even when it's your hobby or whatever, you sit around, there's nothing to do, you just want to smack some buttons. But like you said, there's really not been that much fake outs, there's not been that much predatory behavior. It's just been bleed. Like, it's just legit just been bleed at the range low, just lower prices or the same prices, really. And I don't want to go into the unreasonable trader camp. It's a bad place to be. Everyone's been in it, and I don't think I can recommend it. It's very rare that people that are being unreasonable on the trading side of things actually survive for the long term. So should try, like, if you're in the unreasonable camp, try to get into the reasonable camp, because it's
get some help.
Basically, because it's really hard to quantify what you're doing when you're being unreasonable, right? When you're like, okay, I just want to have a trade, so I will take the setup even though it's not good. When you're doing that, it's really, really tough to take stock of what you're actually doing and where your edge is and how you should be behaving, because you start losing sight of all of that. So cannot recommend. I've gone through it 2018, 2019.
Yep.
I think everyone has, really. Sometimes you get lucky, sometimes you don't. And in the grand scheme of things, it just teaches you habits that are bad, right? Even if you're making money, oftentimes I got lucky on these and actually made a little bit of money here and there. But down the line, it will cost you much more because you will get bad habits that you will
Yes.
stick with. And I cannot recommend. So, yeah.
I completely agree with that. The habit crossover point is so important. Like, let's say right now in the past month, couple of months, whatever, you've been absolutely printing by fading 2-3% moves in Bitcoin and ETH, right? 2 to 5% moves, Bitcoin and ETH, fade those, you make money. Do you think any long-term successful crypto trading careers have been built on the back of that? It's like, can you imagine? Just look at someone who's like a big crypto trader. It's like, oh, what's your strategy? Oh, well, I fade every 2 to 5% move in Bitcoin and ETH. It's like, are you insane? You know,
Yes.
like when this thing is actually a moneymaker, and especially when it trends, and even when it consolidates a lot of the time. Like, I understand the meme is like markets consolidate more than they trend, so get used to it, etc. Even within those consolidations in crypto, if you're fading 2 to 5% moves, 9 times out of 10, you're getting carried out on a stretcher. Right? So if you kind of mentally program for that to be your trading strategy or to be your go-to on a long enough time scale, and it's, I think, shorter than most people would like to perceive, that's a shit strategy, you know? So I wouldn't get too married to it. Just like for our class, you know, 2018 BitMEX, fading breakouts is, you know, if you faded breakouts in 2021, you probably didn't do that well, you know, up to a point, of course. So yeah, I think it's important to form good habits, and even if you are forming habits that may be not conducive to the future, at least be aware of them. Like, strictly compartmentalize them. They're like, look, volatility is like near historic levels, so what I was doing was fading low time frame moves up to this point. This is how I sized it. This is how it worked. This is when it stopped working. So that in the future, when we're in a trending market or when the vol is high or whatever it may be, you can look back at your trading journal and say, look, yeah, I was fading 2 to 5% moves, like having a, you know, playing a very aggressive mean reversion strategy, but look at the conditions. It was macro, legacy, volatility at all-time lows, all this compression, etc. Now we're in a different environment, right? Trending or shifts and flows, etc. Maybe that strategy won't work as well, so I'm not going to use it, or I'm not going to size it as I did, and so on and so forth. So you can still use it and be smart about it, as long as you don't basically assume that whatever habits you made that made you money in a certain part of the market are going to always make you money, because that's just not how crypto works, and certainly not how these markets operate. I want to touch on altcoins a little bit, because a few of them were kind of telegraphing this breakout attempt to some extent. They sort of started poking below their range lows before Bitcoin made an effort. So, for example, Sol on the weekly, or weekly, 3-day, whatever you want to look at, that just seems to be a break from the consolidation that it was in for some time, right? If you look at this present weekly candle,
Yes.
that's just like, that's a break from a range, right? Like, sort of basic TA. If we take the weekly candle of the 6th of June 2022 at about $30, that looks like a breakdown from that range. And that's quite a long range, by the way. That's from like June to now. And that's breaking down. You can see it on the daily as well, pretty simply, right? Like, it was moving sideways for a long time. Now it's not moving sideways anymore. There's a TA masterclass for you. AVAX, pretty similar. I mean, that's been more of just a down trendy drift, even as opposed to break from consolidation, but sort of moving towards its lows. Axie, if you remember that coin, it had some unlocks. I think some private investors got unlocked today, and that got shorted into oblivion on perps, especially a lot of aggression, and that that's breaking down. Some of the stuff is, poking at its lows, like Atom. That uptrend seems to be quite thoroughly broken at this point. I mean, I know it depends on how you measure it and so on, but it does look like a shift in flows, right? Like, you look on the daily time frame, you zoom out slightly, it looks like it just went up for a while, sideways for a while, now it's kind of downtrending. That's sort of the back of the napkin TA. Other exchange coins and stuff like that. Well, I mean, what do you think of altcoins? To me, it seems like the only game in town right now when it comes to alts, and the only game I've seen, is people like scalping Aptos. I've seen a lot of that, which is fair enough. I mean, look, if you're a trader in these conditions and you want to trade, what I would do is go on whatever platform you use, like FTX, for example. You go on like 24-hour volume, and you see what coins and what altcoins are up there, and there at least you'll have a chance to move something, and something is pretty liquid and likely has some opportunities. I wouldn't You could also look at the 24-hour change thing, but a lot of the time that's just weird one-off anomalies. But if you have confluence between the two, like something's pretty volatile, like moving a lot and it has a lot of volume, like this isn't the current market isn't exactly an oasis for trading opportunities. So when you get those two together, you might as well kind of poke at them. But I know we've been sort of uniform in this, and you've sort of poked at altcoins here and there when there's been a catalyst or a setup, or the market pulls back and you buy something that's been strong. But compared to what we're used to, like narratively strong sector-driven flows, all that type of stuff, and none of that is available at the moment. And a lot of alts just look pretty weak. What's on your radar in alt world?
Yeah, I mean, I'm still looking at the ones that have been behaving strong, the ones that kind of have narratives going. But right now, the narratives have just like kind of disappeared. It's the same story every time when the market goes down. Even the strong narratives just kind of like go into the background. And I think people have been realizing that Bitcoin's bleeding. So they've been de-risking on altcoins. That's kind of where the Bitcoin, like the altcoin Bitcoin weakness has been coming from. People are just scared, which makes sense, right? Whenever you get to range low, people get scared, and then the Bitcoin pairs actually go down. You think that the moment Bitcoin gets closer to support, that you'd see people buy the altcoins, expecting a bounce, but it's very much the opposite. People are just like, oh shit, maybe I'm wrong positioned, and if this actually breaks down, I want to get out of the way. Shows how scared the market is, really. But honestly, just generally speaking, I've talked about this for weeks and weeks now, but volumes have been down. People have been trading less. There's a bunch of other problems in the world. It's not Corona days anymore where people are sitting at home just gambling. So there's a bunch of retail just gone, right? So there's less people to trade it. That's why only the narrative coins are doing so well, because you have to have something that people look at, right? And you can still trade those. Whenever you have a bunch of eyes on a coin or on anything really, you can trade it. But in the normal circumstances, it's just too little people for these evaluations in my eyes. So what you're gonna see, and I think this is gonna be the case almost all the time, is just altcoin weakness in comparison to Bitcoin even. So Bitcoin's been underperforming the S&P. Altcoin Bitcoin pairs have been underperforming, as in like altcoins have been underperforming Bitcoin. Just the chain goes, the riskier it gets, the less likely people want to have it right now. So yeah, I don't really see a good reason to trade altcoins unless I'm reasonably certain that Bitcoin is at a low, or unless I see a narrative, and I don't see either of those cases. So I don't really think there's a good trade to be had. If we get a total collapse, altcoins will collapse as well. And then there's stuff to pick up, right? When you have an altcoin move down 50%, 60% in a day or two or three, you can take advantage of that, because there's going to be a mean reversion trade. There's going to be a bunch of trades that you can do. Right now, I don't really see anything interesting. I posted this thing on Twitter where I said that the new coins of this cycle basically will be just like the 2017-18 coins. Basically, like if you compare Solana and AVAX and all those kind of things with Neo and Litecoin and Bitcoin Cash from the past, that I'd expect them to behave similarly. And I think that's somewhat reasonable. The longer this bear market goes, the more likely it becomes, because you basically bleed out the community, and then the other newer coins or the teams that kind of work on newer things have more time to build one and to build up hype and to kind of launch and get their things underway. And that's going to steal liquidity away from the old coins, right? So the longer this goes on, the less likely it is that your coins will come back. And the more likely it is that people are just going to move to new ones, trade the new narratives, and kind of go from there. So yeah, for me, not really that much to do. I will trade them if we get a massive nuke, or if Bitcoin, let's say Bitcoin gigapumps, right? I think altcoin Bitcoin pairs will go down as well. So basically Bitcoin goes to 25K, right? In a straight line. I could see altcoins be at the same price as they are right now, or just a little bit above where they are right now, because their Bitcoin pairs would just dump, I think, just straight up completely go down. And those are the situations that I want to trade them in. But anything beyond that point, I just don't see the retail speculation come back, right? And that's the only real reason for these coins to go up. For the most part. So there's no rush, right? You can take advantage of people getting liquidated. You can take advantage of people being like, oh shit, I missed Bitcoin. I need to have some Bitcoin if it goes up, right? But this sideways bleed thing, really nothing to take advantage of, in my opinion, anyway. So.
Yeah, that's right. It's funny. I just know that the response in a lot of people's heads, and I saw it from your Twitter thread as well, when you say, the point about your altcoins are probably going to underperform or not come back in the same way as they did in the first cycle. They're like, yeah, he's right, but not my bags, of course, right? Like, I completely agree with him, but he can't be talking about my projects. It's everyone else's projects that'll be affected by this.
Just to clarify, I'm definitely talking about your project.
That's very helpful. I think that just makes sense as your base case. Like, I think you can also make a reasonable argument that cycle to cycle, we are getting like very marginally better at building better stuff that's likely to survive more cycle to cycle. Like some of the DeFi stuff, as we'll talk about DeFi in a moment, but like it actually works. Now, yes, there might not be like a clear mechanism which accrues value to the token, and maybe the fee switch hasn't been turned on, so on and so forth, but it's still better than like the ICOs of 2018, right?
Yes.
But it's one thing, as we've discussed, to say that it's going to survive. Another thing is to say it's going to outperform whatever the shiny new thing is.
Yeah.
And your base case should be that new cycle narratives with more product market fit, more history, more information for those teams building, and they can look at past failures, what did well, what did poorly, what investors care about, whatever the crypto use case and meta is. They can build around that better than someone who's already committed to a project and already had its market cycle, so on and so forth. So your base case should be that shiny new thing is going to do better. That doesn't mean that old stuff can't pump, as we've seen it does. Like, look at what Cardano did in the last cycle. But I think the cycle generally tends to be like BTC and ETH lead, risk trickles down. Large caps like your exchange coins, etc., do well. Then you've got shiny new stuff pumping a lot of the time, and you can just see like, well, dude, you can remember the capital concentration around the Sol Luna AVAX Axie trade, right?
Yeah,
the capital, it was absolutely insane, and it wasn't even like purely retail. It was retail plus every single fund was leveraged to the tits on those trades, right? So then you see that type of phenomenon, and then gradually then those start to underperform relative to, they get sold off and underperform relative to BTC and ETH and whatever, and then we get our Dino coins pumping, and that's more towards the end of times, right? But generally speaking, it's quite healthy in the market where you have like dispersion, and when you have novelty doing well, because it means that that's suggestive of like a certain risk-taking appetite, right? That people are willing to deploy and try new things and invest in them, and that there's momentum to tag onto it. And that's why sort of historically, when the Dino coins or old, garbage coins, 2018 coins, whatever you want to call them, when those start pumping, that's why it's often seen as a risk-off signal, right? That the market is so stretched, it's so frothy, and anything new and anything trendy that can be allocated to has been allocated to, and now the best we can do is the old gen coins without the narrative, right? That's sort of why it tends to be a sort of frothy type of signal. But we'll see. Maybe this time it's different. If you wanted to steelman the case for this time being different, I think it'll be something along the lines of, because Ethereum is much more likely to be able to cater to the demand for block space during a bull market, the relative the users there will be more sticky, be it retail or not. Dev activity there will be more sticky, and it'll make the use case for the other L1s less attractive on face value. Because the demand for block space, Ethereum can do a better job of meeting it, essentially. Like, you don't have that mechanism where users are almost forced onto other chains. Now, some of them are purely priced out, which is why they go. Others go because of just the liquidity mining incentives provided there. But I think if you wanted to make the case for the L1 carousel being at least slightly different this time around, it would be because ETH does a better job of being a blockchain, right? Or the base layer is more scalable. Now, I don't know my personal views on that. Like, I don't kind of care. I'm not like a huge tech guy or whatever. I'll just see where the flows are and how it works. But I still think, at least from how people are allocating right now, that there's still a ton of appetite to be the Ethereum killer and whatnot. I just think it might be a bit harder next cycle than it was in the previous cycle. Any thoughts there?
Yeah, I kind of agree. But honestly, from my point of view, just even you would expect it to just, I think your base case should always be expecting it to be the same as it has always been. And it's always been built that way, like that.
Yeah.
The old coins don't do well and then the new coins do. And it kind of goes from cycle to cycle to cycle. And eventually they die. But I mean, Neo and Litecoin and all those, they actually did really well against USD, right?
They did.
they just didn't do well against Bitcoin. So when you're looking at Neo USD, for example, it went from, like, in 2018, it went all the way to $200, right? And then in the bear market, it went down 98% to 4. And then from that $4 mark, it went all the way back to $140, right?
Echo
So there
bubble.
was, yeah, it was like there's money to be made there. It's not like it went to zero. But if you compare Neo, the bottom of Neo, to something like Solana or to something that was newer-ish, they did much better, right? Neo never broke the all-time high. So if you bought in 2018, bought Neo at the all-time high and just held, you never got back in profit, right? And it's now trading back at 7 or like almost 8, but still, like, it's pretty much all the way back to bear market lows, as it has been before. And that makes trading or like investing in this very difficult. Because just imagine you bought something, you see the entire crypto industry just go completely ballistic, and you don't even get back to all-time high, and then you jump all the way back to the lows. Like, I would not want to hold that. And I could see the same thing be true for Solana, right? Like, let's say Solana goes to $15 from here. I could see it go from 15 to 140 again, which is going to be an amazing trade, right?
Yes.
And I don't want to knock it. That is a lot of money to be made. But I'd be very surprised if it broke the all-time high in the next 2, 3, 4 years. I think if you get like a lower high in the 130, 140s, you don't want to hold into that all-time high. You want to be dumping into it. And the thing is with the older coins, right? A bunch of people are holding Solana now. And they're losing money because it's been going down only since the top. And a lot of those, even if they're like super bullish on Twitter or whatever, they're going to be very happy to sell at 50, 60, 70, 80, 100, 150, because they've been losing a shitload of money, and a lot of people just want to sell, break even, get the fuck out, or take that 2x because they bought 70 and they really want to not risk it again because they saw their money basically go to zero. That's the thing with the old coins, right? You have a bunch of people sitting in this that have experienced pain. And if you've experienced pain, you will be much more likely to let go once it actually does recover.
Oh, some relationship advice built into this whole thing now.
Yeah. but that's the thing, right? And you don't have that with the new coins, because the new coins, people buy in on, they're coming from a place of like a good mindset, right? They're coming into this coin, they're like, holy shit, this has launched, it's been going up only, this is a bull market, I'm gonna make so much money. And then they don't want to sell, right? Because they bought this shit and they think, okay, this can go to the evaluation of ETH or whatever. But the ones that have been sitting around, been kind of depressed for the last 2 years, they're more likely, much more likely to sell. That's, I think, one of the big reasons why the new coins do well. Besides, like, okay, the new coins raise money before they launch, and then you can use that money to push advertisement, and in general, like you said, liquidity stuff that they do. Like, they always come up with some weird stuff where they're like, okay, just use our chain, we're going to pay you for it, basically.
Yes.
So there's a lot of advantages that new coins have. And sometimes you get like a good narrative for one or two of the older ones. We've had that with Dogecoin, it's an ancient coin. And then Elon Musk steps in, and there was money to be made there, and it went way above its all-time high. But most of the time, they just continuously bleed out. Like you said, there is a big difference that they're actually starting to become decent. But I'm saying starting to become decent very consciously, because I don't really think they're actually that impressive. It's really cool, the tech and all, but is it really useful? And honestly, I don't know.
And does the token accrue value even if the tech is cool?
Yeah, I mean, you can have the best tech, but the connection between the tech and the token makes no sense 99% of the time, because you either have a security, and that is what everyone is afraid of, right? But then it makes sense, the connection, or you don't have a security, and then there's no connection at all, and people, so you can have the best thing ever, and it's just completely useless. The token is just there to kind of speculate with. But
governance,
it's not,
bro. The forums,
yeah.
they care about my opinion. I think an interesting question to preempt is, you made this argument about why something's had a cycle and all the reasons why its next run could be less explosive because existing holders underwater, they're going to sell. A lot of the narratives have played out. There's more cynicism, etc., etc. Right? The immediate counter argument that's going to come to someone's mind is, what about BTC and ETH? Right? Surely they've gone through the same thing. If they've had this hype cycle, then it died down. You had people underwater, bag holders, so on and so forth. But cycle to cycle, those coins managed to set new all-time highs. So, do you think there's something special? Like, how do you solve that dilemma? Do you think there's something special about BTC and ETH, as they're kind of where the big sort of capital inflows tend to be targeted towards? What distinguishes that logic from uniformly applying to all the coins, and why do BTC and ETH seem to be an exception to it?
I mean, that's a really good question. I think Bitcoin is just like Bitcoin makes sense, right? Just based on, okay, it's the first one, it has a cult following, and it's been driving this market, right? I think that's the most important factor. Bitcoin health is basically crypto health, right? When Bitcoin does well, everything else does well. So Bitcoin is special. It's an exception in that case, just based on the history of crypto.
Can you believe that was a controversial argument, by the way? Like, do you
It's
remember you and I
so
were discussing
stupid.
this? Everyone's like, "Oh, why would you care about BTC? I'm up 50x on Joule." It's like, okay, buddy,
Yep.
I bet you care now about what BTC does, right?
Yeah, I think Bitcoin is basically just like an S&P of crypto, I guess. As in, like, if Bitcoin goes up, everything in it can go up and stuff can outperform, obviously, but the entire market is going to be healthy. But if Bitcoin goes down, everything else is going to go to shit as well. And then you just move down the risk curve. So Bitcoin is obvious, in my opinion, that it's different. ETH is very much not. And ETH is really interesting because I think it doesn't have to be different. It could just be like every other altcoin, but it hasn't been. So that's an interesting one, right? I would say that's one of the ones that is an outlier there, which makes it inherently interesting, right? There's a bunch of use in ETH that you don't really see elsewhere, and it's sticky use as well. So people are just very interested in kind of throughout the cycles, just kind of use ETH. We had last cycle with the ICOs. We had this cycle with NFTs and DeFi. So far, ETH's just been kind of spearheading stuff, right?
The novelty playground type of thing.
Yes, and that might change, right? Maybe another coin comes up with something cool before ETH does, and then ETH gets dethroned, and then maybe ETH just does the same thing that every other altcoin has been doing as well, and just kind of fades into obscurity. I think ETH doesn't have to be like this long term, doesn't have to outperform Bitcoin long term. If they're not on the pulse of this thing, I think they could just as well disappear as everything else. But that's an interesting one, just based on the fact that they managed to kind of stay relevant. That's something that you want to be looking for in other coins. But obviously, what people kind of tend to do, and this is something that you see in the NFT space the best, the Bored Apes have been doing the best, right? Just NFT-wise, that's the one NFT that has caught most media attention.
Yeah.
And what all these other coins that also have NFTs do, and their biggest NFT project is basically all just apes, right? Which is so stupid. You can kind of see that that's not really, like, that's not innovation, right? That's just trying to copycat. I don't think that's necessarily the way to go. So you want to see something else, something that's interesting in a coin or in a project or whatever that isn't necessarily there, that makes sense. But yeah, I think ETH is really interesting to study in that case, because it really doesn't have to stick around. It just does. So
I feel like I'm more bullish ETH from like a Lindy point of view, and I think it's gonna, like, the more innovation comes from ETH, the harder it's going to be for it to disappear. I think is probably how my immediate sort of mental framework for it. And I've just made a text note while we were talking about the kind of altcoins pumping, will my coins come back, shiny new stuff. And it says, if the market is bullish enough, your altcoins may come back, brackets in USD, but likely to underperform, 1, shiny new stuff, 2, BTC and ETH cyclically. Do you think that's a fair summary?
That is a fair summary, exactly.
Okay.
Yeah.
Awesome. Yeah, so that's something to look out for. And also, thankfully, you don't need to choose, right? It's like you sign up to whatever exchange you want to trade on, and then it says, do you want to trade only new stuff or only old stuff? Please opt in or opt out. You can trade anything, and it'll be obvious where the flows are when it's time.
And something I want to be very clear about, right, is, I mean, I trade the old stuff. Like, I'm very much not a guy that has like the finger on the pulse, kind of can predict like the newer stuff. I've had a few good trades on the new ones, but a lot of the time I get like 2x, 3x on the old coins because I'm very familiar with the price action. I'm very familiar with the holders, but I never hold them, right? Like that's the difference. I buy this shit knowing that it's shit and knowing that it's going to underperform because I see a good setup that I can take advantage of, and I know that there's enough liquidity for me to dump it. But I'm not ever going to kind of be like, hey, this like Litecoin is gonna change the world, because it's really not. And you're never gonna hear me say that with ADA or Sol or whatever. There's a chance that they come back and kind of make like this big rally. But I'm only there for the small trades that are risk defined, because when you have an old coin, that's kind of the one advantage that you do have. It's like there's a lot of history, right?
Yeah.
And you know how they behave, and you know what the people do that hold it. So you can you have more information. But the moment you have more information, and this is the case like in any market, right? The more public information there is, the less likely it is that you're going to be having an edge. Because everyone knows the same that you do, right? So the margin for you to make money is smaller. So you have to be more rigorous and just kind of, you get in, you get out, you take the money that you're given, and then you move on. Whereas with newer stuff, no one knows what the fuck it is. And if you have a little bit more information, it can go a long way.
Good way of putting it. Yeah, I agree with that. I mean, just go to where the flows are. You know, it's almost going to sound really dumb and simple, but at a certain point, you know, BTC and ETH lead, and then you kind of see, okay, there's a ton of liquidity in the system. Hopefully, a ton of inflows versus outflows net into crypto. Where are they going? You know, on green days, what's really green? What has a lot of volume? On red days, what's less red than others, or what's even green on those days? Where are the narratives centered around? What are the traders using for their kind of risk baskets? You know, and that kind of stuff can go a long way. And it's also a very good signal, because as you said, when that stuff starts to fall apart and we're back to DeFi 1.0 or Dino coins or whatever, you know that it's not in the early risk-taking points in the market, put charitably. Should we zoom through some of these headlines?
Sure, yeah, let's go.
Let's do it. Make sure I click on the right tab. Nope, not personal. Content. There we go. So this was controversial. Let's jump into it. Sam Bankman-Fried draws fire from DeFi proponents after regulation proposal. This is from The Block, written by Adam James. And I think Sam tweeted out basically this link to ftxpolicy.com titled Possible Digital Asset Industry Standards, about a type of regulatory framework that they'd potentially like to see, or just some ideas or whatever else. And it has several sections: sanctions, allows and block lists, hacks and accountability, asset listing and what are securities, tokenized equity, customer protection, disclosure, and DeFi, right? And obviously a lot of this was controversial, and specifically the part about DeFi in this sort of middle section where it says, and I'll quote the bit from the article. Let me just find it very quickly. If you host a website that makes it easy for US retail to connect to and trade on a DEX, you would likely have to register it as something like a broker-dealer, FCM, etc. You would also potentially have KYC obligations, Bankman-Fried wrote on Wednesday. And then he also said it's extremely important that on-chain code and DeFi remain free, open, uncensored, etc. So people just don't like this document in general, and they took a lot of issue, especially with the US kind of registration for DEXs and kind of the backbone of DeFi. If you have anything to do with America, etc., just being gated, for lack of a better term, because you're not going to be getting those licenses, especially if you're just a nobody writing open source code, what have you. It's basically seen as a form of gatekeeping, right? Mm-hmm. And Sassano was calling him a cancer on this ecosystem. Some other people were going in, SBF trying to get a bad law passed, and all that type of stuff. So if you wanted to steelman the argument kind of against Sam/FTX on this, I think it would take something of the following form: that FTX and Alameda, distinct entities as they say they are now, that certainly wasn't always clearly the case. I think it's a matter of public record that a lot of the liquidity bootstrapping for FTX came from Alameda and its OTC operations, right? I think that's a secret. And so the argument would be something along the line of, when basically the firm took enormous advantage of the regulatory arbitrage that was available in the space, right? Both through the futures curve, and also Alameda is very active on-chain, on DEXs, on DeFi, yield farming, what have you. And so now that they've made an astronomical amount of money, they're now with that capital, which also translates to political capital, they're trying to kind of pull the ladder up behind them after climbing it, in order to further sort of cement some sort of monopoly or keep those advantages or sort of gatekeep the industry to some extent. Do you think that's a fair sort of steelman version of that view?
I mean, if you really, really, really want to steel man it, yeah. I think, in my opinion, right, of it all, and it's really much, I'm not an expert on all of this, but to me, it kind of seems like Sam is trying to do the splits between staying crypto, but also getting the regulatory world or like the normal world involved, basically just trying to connect them both and doing a lot of, okay, we need to give them a lot for them to actually accept us,
Yes.
which I can totally get that people are very, very upset about, because it goes against the crypto ethos, right? You want to be free, you want to do your thing until you kind of overrun. Like that's the mindset that a lot of people in crypto have. Like it just needs to get,
right?
yeah, exactly. It needs to get big enough so we just do whatever, and they have to accept it. And I think Sam is coming from a standpoint where he's like, where he's seen the regulatory side and where he's seen the eyes on crypto, and he's trying to get crypto into this whole thing without necessarily just having to fight all of these battles, like these uphill battles. But I don't want to speak for him. But that's just kind of how it seems to me. I don't think there's anything nefarious going on. It's just basically his opinion is that it seems to me anyway that you cannot win that if you just keep it crypto.
Yes.
And honestly, I do agree with him a little bit, because the self-policing that we've been doing and the work that's been going on the whole, okay, how do we prevent scamming? How do we prevent like predatory market practices? Just has been atrocious, right? Every single year, the scams get bigger, the exploits get bigger. And at some point, they're going to be, if this continues, this trajectory, they're going to be so big that governments will have to take notice of that. And what then will come out is obviously very toxic regulatory work, basically just kind of nuking us all. And I think Sam's just kind of trying to prevent that by playing their game. So I totally get like his standpoint. You're just trying to prevent us getting nuked. And I totally understand the opponent's standpoint, because what the fuck does, like, crypto doesn't make any sense if you do all of this, in my opinion anyway, right? Because that's the whole appeal of crypto. You want to stay unregulated. You want to be this free place. So it's really tough. It's a really tough discussion that I honestly don't really want to be any part of. I don't really know why anyone would want to be.
Listen, because you're a payroll shill, Don, okay? That's what we are. We're payroll shill mouthpieces for FTX, so we have to respond. I mean, look, I presented the Steelman case against it. I don't subscribe to that. I don't think it's awfully compelling. I think it's much more likely that, given how the industry is blown up, given its absolutely terrible reputation, given all the eyes and pressure on the industry now, given how this cycle has unfolded especially, if you let the regulators just regulate it in the way they would want to, without any guidance, without any give or take, and in this whole kind of, hey, fuck you, we'll build our own thing and eat TradFi attitude, we would get regulated to fucking zero. Like, literally to zero. It would be complete garbage. And I think my benign interpretation, and hopefully correct one, is that Sam essentially sees that, and he's like, oh shit, right? Like, if we just let them have their way, the industry gets completely steamrolled, and that means I have less money and less users. That means the industry sucks, and that means I get to do less effective altruism because there's less, just the pie is smaller, right? So what I need to do,
is non-existent.
The pie is, there is no pie. The pie is burned. So what I need to do is propose a tenable, viable crypto regulatory framework that gives enough to quote unquote pay for the sins of this cycle, and at least to appease the hungry regulators who need to be seen as doing something given the magnitude of these scams, explosion, and everything else, while still carving out enough of any kind of crypto ethos or space there for things to operate more or less as they have been. And look, the trend has been towards regulation anyway, right? As we've seen since being here from 2017. And I think it's essentially he's stuck between a rock and a hard place of like if you ignore the regulators completely and don't engage with them, the industry gets regulated to zero, and we'd almost deserve it, and everything would look shit, right? But the second you engage with regulators, and not just in a kind of surface level way, but do it meaningfully with some give or take, and hopefully in a satisfactory manner, then you betray the crypto natives who'll get mad at you for being a gatekeeping shill out scammer, right, or whatever it may be. So there are like no good answers here. I would much rather, at the very least, crypto exchanges and SAM and all the blockchain association, they're like bigger coin center, they're bigger entities at play here. I'd much rather they engage with regulators given the inevitability of regulation, and then hopefully kind of steer it in some sort of reasonable direction, rather than at this point in the market cycle at least go through this whole fuck you, we're permissionless type of attitude, and then suddenly the stable coins get outlawed, our fiat payment rails get outlawed, and that's it. It's like,
I mean, it goes to zeros.
It goes to zero.
At that point, it goes to zero, right? And the kind of discussions that I see, they always seem so extremist, right? It's so weird where people cannot see this kind of distinction between, okay, you kind of have to sometimes do stuff that you really don't want to do. And in crypto, the culture has been you just do whatever the fuck you want to do. You make a bunch of money and then you do with it whatever the fuck you want to. Doesn't work like that. The real world does not. And it's not like crypto is in any way, shape, or form a significant threat. It's just you take this stuff away and it goes to zero and people forget about it. I think at this point, it's not big enough to kind of fight that battle. So for me, it makes sense as well. But
I guess usual disclosure type of stuff, right? FTX sponsors the show, but I think we roast. To be honest, I'm surprised we still have this contract. I mean, we're great partners, but as far as being critical and looking at headlines objectively, I think we're pretty good. And those are our kind of uncensored views. It sucks. We get why the more like pure, so not Puritan, but people who are happy to trade practicality for principle and just extremely principled type of builders who have a grander vision for crypto. It's entirely understandable to us why they're pissed off. We come from it from a very practical consideration that if there's no give or take at this specific juncture, we just get regulated to zero, and so almost any outcome is better than that.
Yeah, pretty much. I honestly think even using crypto and being in crypto and kind of using it day to day is already shit enough, right? That's basically what almost everyone is working on, right? Trying to make this thing so normally people can actually use it. Because I remember the days when I kind of bought crypto for the first time. It was a fucking nightmare. 2014, I was losing my mind. It was really difficult. And I was like, this is just shit, but whatever, I'll buy it just for the meme of it. It got much better when we got like the bull run of 2017. But still, like the coins and projects just didn't work. I tried them out back then, and that was basically what made me super, super bearish on a lot of this stuff. And now we have this stuff that actually works, right? 2020, 2021 actually introduced a bunch of coins and a bunch of projects and a bunch of protocols that actually work. It's still very, very inconvenient to use. There's still a lot of scams going on. There's still a million ways to lose all your money, right? And then imagine you have regulation and it makes it 10 times more complicated, right? It's just, what the fuck do you do then? Because we've barely been able to get to the stage where stuff in crypto is actually usable. That throws us back to way before, like that throws back to 2014 times where it was a nightmare to buy this shit. Which I think would just kill prices, which would kill, honestly, probably the space. So that's my opinion. I'm not here to defend anyone. Not really defending Sam. Probably could have done this in a better way, like explaining all of this. Because honestly, like if you explain it in these words to people, like most people would probably understand. It's just we're always trying, or what I'm seeing is people always trying to kind of talk around the subject a little bit, not kind of say the hard truths. And I think the hard truths is just kind of nice. I like it when people just say whatever they think, even if it's not something I want to hear.
Yes.
But yeah, so I'm not defending Sam. I'm not defending the people that are attacking him. I'm just like, this is my opinion. I mean, if you want to have the space go to zero, be hardline. If you don't, at least try to make a compromise.
Yeah, that's more or less my view as well. Maybe we can get him back on a casual Friday to pass through this. It might be fun. But in my mind, I can see why people get that thread, but I just don't think it's a nefarious form of gatekeeping. I think it's almost like a protective mechanism, kind of realizing if left to their own devices, we get regulated to zero. So let's try to do anything that avoids that. And maybe you got the balance wrong. And look, these are just like frameworks and proposals. It's not like funding a bill or saying this is how it should be, right? And again, there is like a wider crypto lobbying kind of regulatory ecosystem, which is much bigger than just one person. And I like to think those people get it, they care, and they're going to work hard on our behalf to strike the right balance. So that's it. Interesting. More stuff. Well, we can zoom through these. There's this one about Ethereum. Ethereum staking rewards rise with leveraged stakers seeing 11% APR. So again, the proof of stake transition, you can stake your ETH, and obviously there are ways to leverage that to get a higher stake. Now, interestingly enough, the reason I bring this article up isn't just like the APR or anything, but it's this bit here. The main cause for the rising yield is increased network activity, specifically in ways that result in higher fees for network validators, in particular MEV activity, where bots front-run transactions on the blockchain. And there's also been an increase in trading of altcoins on Uniswap in the recent weeks by like literally 1 or 2 coins. There's like the protocol and a couple of other things. Now, it also says here, the increased activity on Ethereum has seen the supply of Ether decrease in recent weeks, as more tokens have been burned during the transaction fee process than were created as rewards for validators. So my point here is that, like, the market's dead, Don, right? Like, it's fucking dead. No one really gives a shit. And still, the little bursts of activity that we have now in the depths of the bear market are enough for ETH to be deflationary, like in this particular look-back window. That's pretty impressive, right?
That's pretty cool,
and it just makes me think about like the future, like when the cycle is actually bullish and there's like 10 hot NFT mints going on every second, DEXs trading celebrity scams up the wazoo, all those things happening at the same time. I can really see a future where that kind of deflationary flywheel effect goes absolutely ballistic, and it becomes like one of the key narratives for ETH outperformance, what have you. That's why we kind of argued, I think even in Technical Roundup, that the merge as a trade in this at that particular point in the market was very much a kind of sell the news trade, and it was priced in. But in terms of future narratives and future catalysts and how ETH can behave economically when things are even kind of mid-cycle or even let alone frothy, there's like a really impressive sort of feedback loop, I think, that we're getting glimpses of when the economic activity is sufficiently high, and it doesn't seem that bar is terribly high if we're meeting it now, let alone in peak mania speculation. So this is one of those like medium to long term very bullish things for me, seeing how the network behaves even in the depths of the bear market as far as supply dynamics go.
That's true. One kind of negative I see in this is that basically maybe you won't see that kind of activity anymore because people just see, okay, ETH's deflationary. Why would the fuck would I be gambling on NFTs? Because I mean, just holding ETH makes more sense. Like, why would I be using my ETH? It's the old argument of why would you be using, and I mean, this is the reason why real money is inflationary, right? Because otherwise people would just bunker it and not use it. So I think that's like the one thing that I'm just wondering how that's going to look like. But I think there's going to be at least one cycle where that actually works out quite well for ETH.
And it's
prices.
Greed, right? That's kind of the answer, the implicit answer to the question, and the answer to most crypto questions. Like, why would X? The answer is greed, right? Like, even whenever you think you may get staking or if it's deflationary, those people crossing the spread, so to speak, are going to believe that their NFT mint is going to be 10 times more than that, you know, or their DEX transaction is going to be significantly higher. That's the hope, at least.
Yeah, but it's going to be really interesting to see how that plays out long term, right?
Yes.
Basically, like a deflationary currency. I just wonder, like, okay, is this really the thing that you want to have or not? I mean, we'll see.
No, you don't want to spend deflationary things, right?
Yeah, you don't.
Unless you spend them for speculation to get more of that deflationary thing.
Which is really funny, right? I mean, there's been discussions about this for hundreds and hundreds of years already, right? So it's going to be an interesting kind of case study, seeing ETH be deflationary while also being kind of this thing that everyone wants to use, right?
It's kind of cool. Money. Yeah, we'll see. It's an experiment for sure. My base case is still if I want like my actual money, I think it kind of has to be inflationary. That's a very unpopular opinion in crypto, but I think economically makes sense. But if you want like a gold type property or just a very reflexive speculative instrument, deflation makes sense. When you get more volatile kind of supply mechanics, that certainly gives you a bit of punting space as far as speculation goes. I skipped a couple. The final two I want to talk about. The one is from Nick Timiaros. He's the Fed whisperer. So we live in such a weird archaic system where a bunch of dudes decide what the interest rate is going to be, and they don't even decide it like covertly. They will float the number to like a select group of journalists who'll then tweet an article about it. It's complete nonsense, right? Like I can really understand the sort of very maxi type of people who are like, oh, monetary policy should be programmatic because this is just a bunch of gate-kept procedural bullshit. Like I get it when you see stuff like this, but the article goes, and so just for context, the Wall Street Journal is historically, at least as of recent time, where the Fed goes to kind of float their decisions and see how the markets respond and whatever else. And so it says the Fed is barreling towards a fourth straight 75 basis point rate rise at the November FOMC meeting. That meeting could serve as a critical staging ground for future plans, including whether and how to step down to 50 basis points in December. Wink, wink, nudge, nudge. Right? That's sort of the implication there. One narrative thread that I think is interesting and worth covering is essentially a new player has entered the arena, and it's the player called financial stability, right? And so the argument that a lot of people are making is with this type of dollar strength and with this type of rate of tightening and with bonds trading where they are as a result, financial stability is threatened. So the Fed may be forced into an early pivot as a result of financial conditions if the bond market just stays illiquid or keeps trading like a shitcoin, because it has a lot of downstream effects into mortgages and the economy in general, right? I can kind of see that. In my head, again, not a macro expert, just talking about stuff that's topical, I can see that being the catalyst for a kind of almost bear market rally, if that makes sense, where it's like, oh, look, they're going to pivot because financial conditions can't bear the stress anymore, and woo, that's bullish, it's finally what we were waiting for. But the primary mandate of the Fed isn't sort of stability of financial conditions necessarily, right? It's like inflation and unemployment, as far as I'm concerned, or inflation being like the primary one. It's more like labor market stuff and the cost of goods. So if they have to pivot because of financial conditions, that's not like a permanent type of pivot, and it's certainly going beyond their mandate if they pivot for those reasons, but inflation still stays high. All that means to me is they're kicking the can down the road, right? You pivot, or you kind of stop tightening to make sure some order and liquidity comes back to the financial system, and then once that's settled, that doesn't necessarily cure inflation. If anything, as we've seen, kind of extreme risk asset speculation or whatever adds to inflation. It's not necessarily deflationary, right? Yeah. So then you can end up in this weird world where they pivot. People think that is the pivot. Stuff rallies, they get excited, and then inflation, if it stays anywhere near sticky or anywhere where it is now trend-wise or whatever, it just means we tighten later, and that just means a longer bear market in order to get down close to the neutral funds rate or even a level of inflation that's acceptable. So I'm not too, like, as a trader, it's pretty exciting to see, what might come of, the willingness of central banks to intervene when financial distress becomes a kind of short-term priority. But as a thinking bigger time frame, that makes me far less excited. I don't think it's likely to turn out to be the type of pivot that people want it to be. I should concede, as very quickly at the end, there's a weird edge case where they're forced to pivot because of financial conditions, and then it just so happens time-wise, inflation kind of naturally comes down, and they don't have to cut as aggressively even if they go back to raising rates. That might be some sexy Goldilocks type of scenario. I don't think the words sexy and Goldilocks should ever be said together in a sentence. I just accidentally did it there. But that's like maybe a 1 to 5% white swan edge case. This is all just macro stuff we know nothing about. Candlestick make boing has been amazing. But any thoughts on this? The fact that bonds are trading like shitcoins while Bitcoin's a stable coin. It's definitely a weird time to be alive.
Yeah, it's really, really odd. I think in general, pretty much like you said, the problem needs to be fixed. And if you kind of push it down the road, we're going to get doubly fucked. And if there's anything that I know about markets, right, if people think the problem is fixed and it isn't fixed, that's going to crash the markets. Like, that's going to blow the bottoms out, basically. It's always the case, right? When you see like, oh yeah, this and that has stepped in, and then you go back to that price level or whatever, then you're really in trouble, right? And that's where like the real bad shit happens. So I think they need to be really, really careful with this, based on the fact that if they get it wrong, you basically see a bunch of shit implode even harder than it has been. But so yeah, I do agree with you. not really an expert on the bond markets and everything, but it's kind of wild to see them legitimately trade like 2018 shitcoins. You get volatility that we've not seen in crypto for weeks and weeks, right? In these markets, it's insane. It's completely and utterly insane. And in those conditions, right, it's really, really hard to use the edges that you've built because everything's out of whack. So either you find something new that you can take advantage of, or you just sit out. So I mean, given that the bonds trade like shitcoins, you can either go and trade like bonds and you can trade the S&P or whatever, or you just can wait till that comes back in line again, and then you can use basically the trading system that you've built in crypto again, whatever floats your boat. I'm not really here to judge any of it. But I think it's important to kind of know that whenever markets are this out of whack, they trade differently. And I think many of you have kind of noticed this already, that it's just completely different. It kind of suits my style a lot, trading like this. But that's only the case because I know when I can actually safely step in or not, because most of the time it's really shit. It's just a few times during something like this, you get these extreme events, and the extreme events are almost always faded at some point. So those are the big opportunities that you can take advantage of. And I'm hoping that there's going to be another one that is going to be fun to trade. There most certainly will be, honestly, at the end of all of this.
At least the whole, oh, I can't trade crypto, it's too volatile argument has... It's like, have you looked at Uber, DoorDash, Netflix, Roblox, all your SPACs, ARK, S&P, bonds? As far as counter crypto critiques go, it's a good one to get rid of.
I think it's always been a shit one, not gonna lie.
Oh, it's like, terrible. It's terrible.
Yeah. You cannot really say, hey, this is too volatile, so don't trade it. If anything, like stuff that is volatile is just right. I think it's a shit argument, always has been, but it is kind of funny to see that everything else is doing the same thing now.
Yeah, it's not ironic. A trader argument for sure. Yeah. Last one, lighthearted. Interpol has entered the metaverse. Have you seen this?
No, I haven't.
There's like an Interpol training video and how they're going to use the metaverse with these avatars to do like training, and there's like a metaverse world. Yeah, it's really bad. You have these Interpol agents in their Oculus, whatever headsets, immersive training courses to law enforcement across the globe. Are they looking for Do Kwon? I've seen some people make that joke. It's quite funny. It's like, oh, we know where he is. Let's go in and find him, whatever that means. But yeah, I don't know. I think, as I've said before, metaverse is like probably cool somewhat at some point, but it just feels like a bit like crypto gaming. It just came narratively too late in the cycle, and the people that were quote unquote building it were mostly just cash grabbing, and the tech just doesn't quite seem to be there on like some sort of reasonable, scalable level yet. And it was just the kind of product of late cycle, what else can we do with crypto now that we've beaten payments and layer ones into the ground sort of thing. And you can see that in metaverse coins, and if you go onto Mana and try to play that game, I mean, you're not having a good time. Metaverse Land didn't really do any, I don't know, it's a narrative that never really clicked with me, and thank God I got sick of it very quickly, and the market did as well from a timing point of view. But look, hey, this is a mainstream adoption, right? You have to run away from the feds in the metaverse now.
Yeah, it's totally absurd. I mean, I don't get the metaverse thing at all. I'm probably like at least 15 years too old for this. I think you have to be like
put the headset down.
You have to be 10 to 15 to kind of get it. I don't. Maybe that's gonna come down the line, but the stuff that I've seen is honestly just kind of embarrassing. It's cool. It's probably gonna be cool down the line. It's not really cool now, though.
So we're early, is what you're saying.
It's one way to say it, but yeah, I don't know. It just seems like there's 10 players on every single metaverse thing at best, or there's just in general not really that much appetite. I'd much rather see people that are like in real life. I don't think the world's that fucked yet that this makes much sense. Maybe we'll get to that at some point, and then we'll all just live in the metaverse and own nothing and be happy.
Eat bugs.
Be fed bugs while being in the metaverse. Don't even have to look at it.
State-sanctioned Nutri-Brick.
But yeah, it seems like dystopia to me more than anything. But like I said, could very well be just too old for
just
getting
build
it.
something cool, right? Like if you're gonna make the case for crypto and all these other verticals, like crypto payments, like stablecoins are cool, they work, right? Like a lot of these layer ones, they're cool, they work. Stuff actually happens on there. Can you show me a good crypto game? You can't, right? Like, can you show me a good like metaverse? And look, this is even without talking about how useless the tokens associated with these things are. Can you show me one of these projects building like a good immersive high quality metaverse? I mean, fucking Mark Zuckerberg has gone all in on this and he's still struggling to do it, right? But some crypto project with a token is of course going to do an amazing job, I'm supposed to believe. Count me as cynical for now, but I'm very open-minded. If I have like a good user experience, I can be more bullish on the sector. But a lot of these late cycle products just aren't products, both from the gaming point of view, metaverse point of view. Maybe next cycle, the bullish case would be, and this is like pure Cope Steelman, it'll be something along the line of DEXs were a good idea, but the first cycle execution with IDEX, CryptoBridge, etc. were shit. And then the second iteration after the bear market was amazing. And maybe we get the same with like gaming metaverse, where first iteration was shit, it's too early, and then the second iteration is amazing. Something to bear in mind anyway.
Yeah, I mean, I think people underestimate how much it costs to make a good game.
Oh mate, it's unbelievable. Yeah.
Yeah, so it's like, where the fuck is that funding gonna come from? Like these crypto, basically the ICOs or whatever, or even the projects that just raised, they get like what, like 50 million at this point if they're lucky. I mean, it's a bear market. Maybe they get much more in a bull market, but still, that's like nothing in the gaming world, right? These games, they cost so much more, and you can obviously make indie games, and maybe there's gonna be a game that just hits the balance just right. But I think in general, if it's crypto, it's always going to be gambling related, right? It's basically like a pay to win game if it's with crypto. Just kind of makes sense.
Or yield farming with extra steps, right?
Yeah, honestly, yeah. So I don't know if you want to combine gaming with that in general, right? Games that are pay to win are historically kind of like not that great. So it would have to be implemented really, really well. And I get why the gamers hate it, because
I was gonna say that, yeah, game that also doesn't help, right? The core community just loathes crypto and loathes financialization and all pay to win and all those things. So we're not at a great starting point. But we are brought to you by Raid Shadow. Should we wrap it up? Anything else?
We should wrap it up. Yeah, I don't think there's much more to talk about. This market's been at 19.2K for months now. It feels like it's 19.1 right now, but I mean, potato, right? Or
right. No, that's called the daily range between 19.1 19.2. If you caught that, you're like tier 1 scalper on crypto Twitter. That's all from us then. We've got a packed schedule for you next week. Monday markets, trletter.com newsletter on Tuesday. Don live stream on Wednesday, talking about the same price for an hour. That's impressive. You should tune in just for that feat. And then we'll try to do a casual Friday, or we'll get like a podcasty person on. Maybe we get Sam and say, explain to us your evil plan. That might be fun. That's all from us. Again, thank you to FTX for supporting the show. Obviously, that means everything we said about the FTX portion of it isn't credible, but, you know, we like to think that we're honest and say what we think. If you want to support the show, links in the description below. Sign up, read the leverage trading doc, even if you didn't sign up to anything. It's a good doc. And like the video, subscribe, all the YouTube stuff helps. Let's try to stay relevant as the price stays at 19.2. That's all from us. Have an excellent weekend, and we'll see you next week.